how can I take it responsibly to say 1,000 units over the next 10 years and get us there in a good spot so that when we are at 1,000 units, we don't do what some brands did, which was overheat, push to 1,000, and then things start to get shaky. But like just a strong, our CEO Todd Leff called it, we're trying to build a fortress brand.
Hey, everybody, and welcome back to another episode of Behind the Franchise. As always, I'm your host, Paul Ehlinger. Today, we are joined by Matt Stanton. Matt, welcome to the show.
Great. Thanks, Paul, for having me.
Absolutely. And Matt, for those who may or may not know you, I know you've got a pretty illustrious career in franchising behind you, so I'm guessing there's not a lot of people who don't know you. But for those who may not, can you kind of give us, who the heck are you and how'd you get to where you are today?
Yeah, I started in franchising a little bit over 15 years ago. Variety of different brands from food, and then worked my way into kind of fitness and wellness. And now I'm here in the wellness and spa business with Hand and Stone. But, I've had the privilege and opportunity to represent brands such as Anytime Fitness, Orange Theory, Dry Bar, Elements Massage. And so,
Just a
I've
few.
been back in food with Smashburger in its early days. So great
When I
journey.
was looking over your background, I feel like I have to ask, how many units have you been a part of growing brands in total? Because you've been a part of some
A
really,
lot. I should
really
probably
big
count
brands.
sometime. Yeah, I mean, it's definitely in the thousands for
Yeah,
sure.
yeah,
And what's neat about that with each brand, honestly, with each franchisee, it's a different story, it's a different journey.
yeah.
And so probably one of the most fulfilling parts of my career is some of the franchisees I helped place 15 years ago still stay in touch, and they
Oh,
have
yeah.
thriving businesses, or they built something great and then sold it and they're off doing something else.
Yeah.
But it's just been neat being a part of so many individuals' stories on the franchisee entrepreneur side, and then with these other brands that grew from very small to something big, or
Yeah.
just kept that momentum going, and to kind
Yeah.
of see where they are now. And then honestly, driving around and you see
Yeah, just like
different locations, like I did that, or not just me, but like I was a part of that. I was a part of this, and
yeah,
you
yeah,
can
it
see
is.
that in cities throughout the country and
It
even other
is.
parts of the
It's
world.
one of the coolest parts of working in franchise. I mean, so we sell software, but it's the same thing where you just like, I feel like we can't go to a city now without seeing like one of our customers' locations, and it
Exactly.
makes a great touch point. Yeah, you get the headshot in front of the front door
Mhm.
of it. It's a good spot.
Yeah.
But no, I love that. I was just so curious because I was like, man, this guy's made a lot of businesses happen. Like those are like people's
Mhm.
livelihoods. So there's thousands of families out there that you're just helping grow. I love it.
Totally.
But maybe I was also very curious because you have kind of gone from restaurant into fitness, and now I'd say more into wellness.
Mhm.
What have been the similarities and differences from your perspective, like on the development side, right? Like obviously, primary goal is responsibly grow the brand, get
Mhm.
good producing units. But what are those differences as you are selling a different concept in a different industry?
Yeah, I mean, look, the big stuff stays the same.
Mm,
Like you said, responsible growth, making sure that you're bringing a franchisee who's well paired with that brand
yeah,
into it, and having some of that rigorous screen, but still casting a wide net because um, you want to provide opportunities for
yeah,
those entrepreneurs. But there are differences, and let's just take Hand and Stone for example. It
sure,
is a people business. Like all of these brands are people businesses, but especially in wellness, it's people.
yeah,
It's one-on-one service. It's you're there to relax, you're there to relieve stress, you're
mm,
there to relieve aches and pains, and you're doing it in a very close setting, one-on-one. So yes, restaurants are people businesses too, but not to the same extent
yeah,
that the wellness industry is. And so
yeah,
that goes into how do we then select franchisees, or what franchisees are going to be well suited for dealing with that people business,
understanding
and
that side of it.
hiring the right people who provide that one-on-one close service. So I'd
Yeah.
say restaurants are a little bit more on that. You're kind of a factory in a restaurant. You're
Yeah,
making
it's a lot
food,
more
you
like
go to the
operational
customer,
excellence, I would imagine, where
and
it's
it
like,
is still hospitality. Like you
yeah,
can still lose it on the people side, but much more so. It's just that much more so on the
yeah,
wellness side,
no, and it
for
makes a
sure.
ton of sense. And I'm curious for you. So like you're relatively new to the role at Hand and Stone now,
Mhm.
and I'm curious. You've worked at a scale of different sizes, right? From early smash burger days to, Anytime Fitness being massive. Hand and Stone, I'd say, is like squarely in the middle, like growing really fast. You guys are like what, 600 something,
About
600 plus units?
650 units.
Yeah,
Yep.
650 units. What is it like coming into a brand at this stage? Like obviously they've got something that works. And
Hmm.
now for you, it's like, how do we either make it work more or more can work more efficiently? What is kind of your priority, coming into a brand at this stage?
Totally. Yeah. I'd say, we're at one of those major, I'm not going to call it a pivot point, but it's, a brand that's say going from 10 to 100 units. That's
Yeah,
its own set of challenges, right?
sure.
Hand and
Yeah.
Stone passed that long ago. And then maybe you're going from that 100 to 250 or that 100 to 500 units.
Mhm.
And you're in that scale, but still wide open markets.
Yeah.
And you're figuring out how to kind of operate at scale now.
Hmm.
And Hand and Stone, we're in kind of that, okay, we're going from now 600 to 1,000 unit kind of area. And that's its own set of challenges where, or I shouldn't say challenge, it's a
Opportunities.
transition. How you operated the brand at, say, 200 units
Yeah.
can't be how you operate the brand
The
at 600.
systems have to update. They have to become more
The
sophisticated.
systems have to update, even how you, say, communicate both back
Mhm.
and forth with franchisees. If you're 200 units, you can maybe talk to everybody more regularly. At
Sure.
600
Yeah.
units, it's a little hard to kind of get everybody in the same room, have those communications. So how do we still operate at a high level, get
Yeah.
great feedback from the ground level, but how do we do it in an efficient manner where we can actually digest it all,
Yeah.
right? And so that goes into everything from communications to you start hitting that transition point in your marketing where you
Hmm.
can't buy marketing on just a store by store level basis. That's not efficient. It's not a
Yeah.
good use of your dollar, but it unlocks. Now you can do like DMA level buying and,
Yeah.
and different opportunities unlock for you on that. And then on the development side, um, other challenges of certain markets are a little more full than others, but that's
Yeah.
also a nice opportunity because there's brand recognition in that market. You're not
100%.
introducing the brand to most markets,
Yeah.
but you have to figure out how to properly scale it within because there's a ton of advantages to having really good saturation of the market.
Yeah.
But you can go too far and you can place things way too
Sure.
close together and you can do some damage too if you're
Yeah.
not careful.
And I
So
would
we have
guess
to navigate that balance.
that's got to be like such a prescient thought for you guys as you guys think about
Mhm.
growing these next 300 or so units, which is like, to your point, there may be 4 or 5 hand and stones in a market. What is kind of the limitation? And I would guess we want to
Mhm.
test the upside, test the downside, and find that sweet spot. How does that change for you? Like when you are selling and, as you guys are defining new territories or defining what is available, how do you attack that challenge?
Yeah, it kind of depends where a market is. It's kind of market by market, right? The
Yep.
very saturated markets really take some looking into. I mean, I
Yeah.
was just working with an existing franchisee, one of our good franchisees, who's looking to expand in the Detroit market.
Hmm.
Detroit's pretty full for us.
Sure.
So, if this was 200 units ago, it'd be great.
Yeah,
We
I'd be like,
got this
yeah,
area, this
tack it
area,
on,
this
tack it
area.
on,
We,
tack it on.
take a pick or buy all three, and like
Yeah.
let's go. We're doing some very serious analysis. We're running a lot of predictive analytics to
Hmm.
say, okay, where can we slot in, and then trying to match that with available retail. So the great thing is, you get those saturated markets. We got people who want to grow in them. The hard thing is, we then have to do quite a bit more analysis, a bit more threading the
Yeah.
needle in some of these areas to say, okay, I think we can put something here that adds a unit to the market. It fills a gap in this market,
Yeah.
but it's not going to be high impact. We're
Hmm.
probably never in some of these markets never going to get to zero impact,
Yeah.
but we want where the benefits outweigh the negatives, right?
Naturally. Yeah.
Increase market awareness, increase marketing dollars,
Yeah.
um, brand coverage, all that kind of stuff. Positive, okay, but we don't want to. So we have thresholds on how much impact we'll have, and then we have to
Interesting.
run all that and say, okay, we can put it here or we can't put it here,
Yeah.
and then go from there. So, kind of depending on where we are, it creates a bit more analysis. But the good
Sure.
thing is, in these markets, we got people who are eager to grow if and
Yeah.
when we find those slots to put them in.
Yeah. On that front, I'm curious, how do you balance kind of that inside sales of like we have existing franchise owners who we know want to expand versus there's got to be some value to bringing in fresh blood, fresh capital
Totally.
to be, a net new owner. Is that something you guys are trying to strike a balance? Do you prefer one over the other? Is there more demand on one side or the
Mhm.
other?
I love both. I
Yeah,
mean,
sure. Yes,
if
both is
your
good.
franchisees are saying, I want to buy more, that says something great about the brand. That
100%. Yeah.
says your business model works. They're already in it, so they
Yeah.
know more than anybody. And if they're saying this is where I want to put investment dollars versus the plethora of opportunities that they have
Sure.
outside the brand, that speaks volumes to the quality and the efficacy of the brand.
Yeah.
Um, but like you said, there's a value to bringing in new owners, new perspectives, and honestly, you know, giving people a shot at entrepreneurship with
Sure.
our brand. And so
Yeah.
that can be some good stuff and can bring energy into the brand
100%. Yeah.
that can revitalize certain aspects. So the short answer is we love both.
Sure.
Um,
Growth
I
is
wouldn't
good.
want it to be all one way or all the other way. If
Yeah.
it's all new, it says, why aren't our existing
Why aren't
owners who want
existing?
to
Yeah.
put more investment dollars into this?
Yeah.
If it's all existing owners, are we being too closed as a brand
Sure.
and not being open enough as a brand? So my goal, my rough target is roughly 50-50.
Sure.
If we
Sure.
can kind of balance that. Now, that's not to say at any one time, any month, any stretch
A
of
lot of
months
variance in that. Yeah.
could be higher, could be lower, depending on interest, depending
Yeah.
on availability, et cetera. But over time, as we look back, I'd love to see that kind of 50-50 approach where we're bringing in new blood, but
Yeah.
we have those in the system that want to keep investing.
Yeah, it makes a ton of sense. Tactically speaking, is that something you guys do like lead generation development on, like internally within the system? Or is that something you're typically relying on like inbound from existing franchisees to dictate, hey, we do have this demand coming internally?
You know, it's interesting. One initiative we just started is given that some of these markets, again, aren't full up, but there's
Mm.
a little bit of question like, okay, if I was going to grow, where would I grow here?
Yeah.
Um, we basically just invited all of our franchisees to schedule a market review with us,
Yeah, it
just
makes
so they
sense.
understand what's available in their market for growth.
Yeah.
Um, and look, even if they're not the ones growing, it gives them an opportunity to understand what we have planned for the market and helps with that
No,
back and
no
forth communication.
surprises. Yeah, no
Exactly.
surprises
No
when a new deal
surprises is
goes.
a great thing to
Yeah.
do. And they care about what's going on in their market. And then
Sure.
ideally it sparks some interest and say, oh, I never thought about this area, but these demographics are actually better than I realized. You know, I might not live over there, but oh wow, it's
The
really changed a
opportunity's
lot
there.
or has good baseline fundamentals.
Yeah.
I actually might be interested in that. Let's talk. In fact, we just closed a deal Saturday
Oh, congrats.
on a market where an opportunity came up, new shopping center. So again,
There you go. Yeah.
this area has been developing. The retail is now developed. And then it was a matter of talking to some franchisees existing in the system saying,
Yeah.
hey, this area is kind of coming of age now.
Yeah.
And there's a great shopping center that's being built. Do you want to be a part of this? And sure enough, one of our franchisees was like, yeah, I didn't even know that was getting built, but
Yeah.
let's go do it. And now they're going to go grow in that specific market. So
Yeah.
absolutely, there's a proactive piece to it. But then honestly, our franchisees often know what's going on in these markets
Yeah, sure. They're coming to you and
a
being
little
like,
bit
"Hey, did you
before
know
us.
there's a shopping
And there's
center
other
here?"
ones.
Yeah.
Yeah, there's other ones that are calling us saying, hey, um, you know, do help me with some research here, but I think we might have
Yeah.
an opportunity, and
Yeah.
let's.
I hadn't thought about that before, but do you build relationships with like Simon Properties or like any of these large shopping center developers, just in the sense of like, "Hey, tell me what's
Mhm.
coming next quarter, what's coming next year." Is that something you're personally doing to just get ahead a little bit?
Absolutely, yeah. It's a
Yeah.
big part of our real estate strategy is to be involved with the major landlords, both national as well as regional,
Sure,
because
sure,
we
sure.
are throughout the country. And so we do that in a few ways. We get to know them. We attend the major real estate conferences,
Makes
usually via
sense.
ICSC.
Yeah.
But then we also maintain a strong local broker network who's
Yeah.
charged with
Know
really
what's
have
coming.
deep
Yeah.
roots with those landlords, know what's going on, because there's so many real estate deals where, okay, it can be a new center, but
Yeah.
it can also be a tenant's leaving a center.
Yeah. Just to
And
replace them.
great, we need to get in on that because those off-market deals, like that's going to be leased out before a for lease sign ever hits a window.
100%.
So we need to, as a national brand, as a brand with scale and a brand that's growing, we pride ourselves on being kind of at the forefront And one of those first calls of, hey, when something that fits our criteria
Sure.
is going to come up,
Yeah.
we want to know about it so we can potentially fill it.
Yeah, and then I would imagine for you guys, like the sales pitch is just like, hey, we've got great unit economics. Like if we come into this shopping center, it's a net lift for everybody around us. Like everybody kind of wins.
Yeah, I mean, I think our brand is generally very
It's
attractive
very
to
strong.
women
Yeah.
because we bring in a good demographic of clientele. We have kind of a steady state of demand throughout the day, which can be nice.
Yeah, that's
Some
nice.
restaurants is like they pack the parking lot at lunch or at dinner and
Yeah.
then goes away, whereas our clientele is more like rolling throughout the day. So that
Yeah, that
creates
foot traffic. Yeah.
um, and so there's a lot of kind of advantages and then we're, a good brand name that's just a solid brand
Yeah.
in that center that then helps attract other brands as well. So we have that reputation, which is really nice as we're looking for real estate.
Yeah, yeah, no, that makes a ton of sense. And I'm curious. I feel like we don't do Fran Dev, so it's kind of a topic tangential to us. But I see a lot where people like have different requirements. Where it's like, hey, you have to buy a multi pack, you have to do this or that.
Mhm.
How do you think about that? Like, as what I would call an expert in the space, like,
Yeah,
where do you typically want to put the limitations on growth? Because that's kind of what those are, right? You're limiting potential buyer pools on purpose because you've defined this is a better profile for you. What are
yep.
those limitations for Hand and Stone, and how do you think about setting those?
Yeah. So on the low end, we are happy doing single unit deals. I know there's brands out there that like you can't get in this brand unless you commit to at least 3 or 5 units. The fact is, some people, only have the financial resources at the
Yep.
moment to go do one.
Yep.
But hey, if they're successful and they can build that business, they can then leverage that into 2, into
Yep.
3. And I've seen some people then go on and on. I mean, we had some franchisees at Anytime Fitness that's how they got going. And
Sure,
they
they were just
rolled
like,
into
oh,
dozens of right over time.
yeah.
So it doesn't always have to happen up front. And
Mhm.
sometimes those single unit operators are going to be super hands-on. They
Yeah.
need it to work.
Sure, yeah,
They've got a
they've
lot of
got
skin in the game of, a big portion of their net worth's in it.
yeah,
So they are vested,
yeah,
more so than maybe some of the larger groups
yeah,
coming
that
in.
are just using it as like a
And
financial
that can be
instrument.
great.
Yeah.
But that's not all we want. Like we see an advantage and we like the more sophisticated groups who are coming in, committing to 3 or 5 units and then
Yeah.
more over time. And there's advantages to that. With one call, we can kind of cover multiple spas at
Yeah.
once. They sometimes can bring in a little bit more sophisticated operations teams. Obviously, the financial ability to keep that growth going, they're not constrained in some
Yeah.
of those areas. So there's advantages to both. So kind of like my answer with, new franchisee, existing franchisee, it's like
Why not
we
just
like,
grow
we like them
across
both.
everything?
Yeah.
Yeah.
And it's not to say, and it's good for the brand to have both.
Yeah, I
If we
think
get
the
too
diversity is good.
concentrated on one,
Yeah.
we might say, hey, what's going on here? I think really our main screen with those is how are you going to be involved with the brand?
Yeah.
Especially when we get to the multi-unit owners, especially multi-brand multi-unit owners.
Yeah.
They're not all the same. Some are a little bit more we'll hire someone and not
Yeah.
be that involved in it.
They
And
want to
others,
make their X% per year and just kind of roll on with it.
exactly. And others are like, get it about operations and get
Yeah.
it about a people service business, and are going to execute brilliantly and be very involved in the business. So we do really want to screen and look for like, how are you going to run this business? Who's going to be involved on the day to day, and how
Yeah.
are you going to do that? And that goes for the multi-unit as well as the single unit owner. Like,
Yeah. Yeah.
you
100%.
hear some of this talk in franchising of like, oh, it's a passive opportunity or semi-passive.
It's hard to believe anything is passive in business ownership,
Now,
at least from my
all of those
perspective.
spas are manager run. You hire a manager, they work in the business on the day to day. But you as an owner need to know what's going on with the business. You need to understand your P&Ls. You are going to care about that business more, or you should care about that
Yeah.
business more than
Yeah.
anyone you're hiring into those positions. So you're working on the business while your manager maybe works in the business. And that's really, really critical to have that involvement at the ownership level. So regardless of what your scale is, like, that's a key success criteria.
Yeah.
And honestly, in all my experience, that's probably been the biggest corollary to success versus background or even past franchising experience or anything like
Yeah,
that. I've
that's
seen people with
interesting.
zero franchise experience. I don't know, maybe they were accountant and now they want to go own a business, be crazy successful, or
Yeah,
also not be successful,
sure.
often based on how involved are they in their business.
Yeah,
Really finding what's that next area of improvement. How am I going to shape this team? How am I going to set the right culture, the right tone for my team?
yeah.
Make sure everybody's trained and go from there.
How are you making those calls in the process, right? Because
It's
I
hard.
think that's a really hard thing to do, especially
Mm-hmm.
because it's, you're incented to say yes a lot, right?
Yep,
Because you want to grow. But you
absolutely.
also need to do it in a responsible way. So, like, what are kind of the trigger points for you where you're trying to identify, like, hey, is this person going to come in and operate specifically if they are net new, they are an accountant or they haven't been in
Mm-hmm.
franchising before? How are you trying to determine that, like, hey, this is going to work for both of us, and 9 months from now, we're not both going to be, shit out of
Yeah,
luck, kind of?
yeah, totally. Um, Transparency, not sugarcoating over some of the involvement aspects of the business.
Yeah.
And that gives them an opportunity to say, is this what I want to sign up
Yeah,
for
is
or
this the
not?
lifestyle you want?
Right. And look, and it's not that, hey, you got to grind in your spa 10 hours a day, every day of the week. No,
Yeah,
you hire a manager for that. But let's talk about what you need to accomplish as the franchisee. Let's talk
yeah.
about what us as the franchisor, how we support that,
Hmm.
but by having a very clear understanding of like, this is what support looks like, but this
Yeah,
is what the responsibilities and kind of where you win as a franchisee, what that truly looks like. Now you can match up and say, do I have the time for that? Do we have
yeah,
the ability for that, the
yeah,
interest
yeah,
in that? And it's different for each brand
yeah,
of exactly what's that's going to take. But I do see franchisors sometimes in that kind of eagerness to get a sale done, maybe oversell the support.
yeah.
Oh yeah, we handle everything for you. When it's
Yeah,
like, no, this comes down to execution at the ground level.
hundred
And
percent.
nobody at the franchisor side, we can provide training,
Yep.
we can provide KPIs, we can provide guidance, we can provide coaching. What we can't do is hire your team, get your team to execute on a
Yeah,
day by day basis. That
yeah,
comes down to your responsibility. Now, here's how you do that.
yeah.
But the fact is, that daily execution comes down to you. Are you well suited for
And
that?
it's a
Does
it's a
this
very
interest
specific
you? This
personality,
makes sense.
right? You just got to give a shit
Yeah,
every single day. You can't take a day off from
exactly.
operational
Yep.
excellence, right? Um,
Yep.
That's fascinating, and I think I always love to talk to development people about the term responsible franchising because I think,
Hmm.
I mean, arguably it's a buzzword almost as big as AI right now. Like I think people talk about it all the
Yeah.
time. There's a lot of LinkedIn arguments,
Hmm.
you can watch from afar on what is or isn't responsible franchising. What does that mean to you? Because I do think you have a tough job. Like you have to grow, you have numbers you have to hit, but you have to do it in a way that doesn't leave somebody holding the ball from a business investment that doesn't work for them. So like what do you think about that? How do you think about it?
Yeah, totally. First, I think responsible franchising starts with solid unit economics.
Hmm.
Without that, all the support from the franchisor doesn't doesn't matter that much, right? We gotta have a brand that if a franchisee is doing what they should be doing, they at least have a
They
good
will make
shot
money.
at being
Yeah,
successful.
yeah,
Nothing guarantees success. Every successful brand out there has units that fail
yeah,
for a variety of different reasons.
sure,
But generally, does the brand at the unit level succeed?
yeah.
And it kind of starts there. If your brand doesn't, you probably shouldn't be in a position where you're trying to grow with a bunch of people.
Right.
There may
It's
be
only going to
a
get more
few like
complicated.
key franchisees in your system that like have figured it out and know
Yeah,
how to make it work. But generally, it starts there in my mind.
yeah,
We got to give people a good shot at this. And then beyond that, okay, then it's like I said, every franchisor, every brand has to figure out what is the franchisor going to do, what are the responsibilities of the franchisee,
yeah,
and then being very clear and transparent about that so they can select properly into that system.
yeah,
And then it's a matter of execution.
yeah.
A franchisor that's being responsible, well, if you've promise certain services. Not
Deliver
to
on the
say you're going to be
services.
perfect at those,
Yeah,
but you're gonna invest in them. You're going to try to execute well
yeah,
and course correct if things aren't going right.
yeah,
And same with a franchisee. If you're coming into the system, you have your set of responsibilities and taking your responsibility for those. And so it
yeah,
becomes a two-way street there that each has to try to keep improving and executing too. To me,
Yeah.
that's responsible franchising. And then you get into some of the nuance of depending on the stage the brand's in. We talked a little bit about the site placement in
Sure,
crowded
sure, sure.
markets, or maybe you're a newer brand. Which markets are you going to go execute to?
In first, yeah.
Um, and then obviously continued investment in the brand. How is the brand staying current, innovating, all
Yeah.
that?
Yeah.
And brands need to do that. So, but I think responsible franchising starts with have your brand figured out first
Yep.
before you get a bunch of people to contribute, you know,
Yeah.
um, meaningful portions of their net worth to your brand
Makes
with the
sense.
hopes of being
Yeah,
successful.
yeah, makes sense. I mean, I think the best question I could ask, that's a sales pitch for you almost is why did you choose Hand and Stone? Like you know what I mean? You've got a great background. I would imagine you could have gone to work at a lot of different brands. What drove you to Hand and Stone to come do this 7 months ago?
Yeah, I mean, great follow-up question to how I just answered the previous question, because a lot of it has to do with that.
Yeah,
Hand and Stone has really good unit economics. In
yeah,
our category, we're the highest unit volume
interesting.
of the competitors by a pretty significant margin.
Yeah,
And so I think Hand and
what do
Stone
you think
has,
causes that differentiation?
yeah, I think it's a matter of we have enough breadth of service,
Hmm.
but not too much breadth that we
Yeah,
have focus. So what we do very well. So we are,
nice.
the second leading massage provider in the U.S., and we're actually the largest provider of facial skincare in the
Oh,
U.S.
interesting.
People
Yeah,
don't always
yeah. I was gonna
realize
say I
that.
don't know if I would have
So
known
we have
that.
these two kind of revenue modalities
Hmm.
that we excel at, but we haven't. It's easy to chase the next fad, the next modality. Let's do
Especially
this
in
also.
wellness. Yeah, I was
Let's
gonna
also do
say.
wellness. There's always stuff coming at us. Now we'll experiment with stuff, we'll
Yeah,
trial stuff, but in terms of incorporating it as a core fundamental piece into our brand,
yeah,
um, we've stayed very focused on those, and so we
yeah,
do them very well, and we stay close to our core in
yeah,
that, while still experimenting of if things where might this lead, versus getting sucked into this trap of let's just have this menu of everything but
let's
actually
add
not be
let's
good
add
at
Botox. Let's add cold plunge. Let's
exactly
add yeah,
exactly
yeah, yeah.
so too much focus and you can
Limit the
limit
market
your revenue
opportunity.
potential.
Yeah,
you know Too much lack of focus and you can just it's too hard to execute,
yeah,
especially in a franchising model. And so I think Hand and Stone has done a brilliant job finding that right balance between breadth and depth and
yeah,
just being excellent at what we do. And by being excellent at what we do, when someone wants facial skincare or they want massage, we're often the first call in a
yeah,
market.
yep,
And that drives high levels of revenue. And then obviously we have, a solid business model that works its way down to the bottom
sure,
line.
yeah,
And so, it's a good, unit economic model. It's good return economics. We're also balanced. Also in wellness, it's easy to fall into the trap of let's just be super decadent with
oh
all of
yeah, oh
our look and
yeah,
feel. We want a good look and feel. People are there to relax and stuff. But guess what? We're not the Four Seasons or whatever. Like
correct, yeah,
that's its own product. And
yeah,
we're not trying to necessarily mimic that. And so we need to make this a good return on
yeah,
investment for franchisees, and that takes some discipline in how we build out, how we furnish and construct our spas. So again, it's balanced. We can't be low level, but we don't need to be crazy high level. We need to be a good solid. People are there for regular membership massage, regular membership skincare.
yeah,
We need it nice, but we don't need it extravagant, and that gives us a good return and good economic model there. So,
yeah.
and Stone's been able to execute on that. And so one thing that drew me to that was, okay, that's been a part of Hand and Stone, for a long time, and
Just
they've had this great
makes your
steady.
job easier and easier, I would imagine. If you come into
Yeah,
like great
exactly.
brand, strong unit economics, you're basically just out here saying like, "Hey, let's just do it,"
Totally. And so that's kind of, brought us to where we are. But then it's a nice challenge. I mentioned at the beginning, we're kind of in that 600 to 1,000 unit phase, which
Yeah,
presents its own challenges. So from a professional interest side of me, it's a from a development side, it's an interesting challenge to say, how can I help properly shape this brand
yeah,
and grow it properly in this pivotal area where a lot of brands stall out and they're just
yeah,
kind of stuck there. how can I take it responsibly to say 1,000 units over the next 10 years
Yeah.
and get us there in a good spot so that when we are at 1,000 units, we don't do what some brands did, which was overheat, push
And
push
then,
push to a
then have
thousand,
to
and then
close another
things
300.
start to get shaky. But like
Yeah.
uh, uh, just a strong, um, our CEO Todd Leff called it. We're trying to build a fortress brand, just a brand that
Interesting.
like is solid. You get to 1,000 units and it's just
It's just
solid
executing.
and runs well.
Yeah.
And so that's the challenge for
Yeah.
me professionally
Definitely.
here is taking this brand from where we're at now to that level while doing it in a way that we maintain that kind of fortress brand.
Well, we'll have to do
Character.
a follow-up episode, 7 years
Yeah,
from now when you guys hit
right,
1,000. We can talk
exactly.
about how big of a fortress you have.
Me too.
No, this was awesome. I think I really love your perspective on the balance, because I think that is such a crux of the place you're at right now, right? You guys have built systems that have worked, and now it's like, how do we expand those systems, but in a way that doesn't cause us to break down over time? Because you guys are clearly picking up steam still. It's fun to watch from the sidelines.
Yeah. Thank you. Yep.
Well, Matt, thanks for being on the show. For folks who want to find you or learn more about Hand and Stone or Hand and Stone franchise opportunities, where can they find you guys?
Yeah, obviously with Hand and Stone, handandstone.com, and then you can learn about our brand and you can go to our franchising page to learn about franchising. And then for any kind of contact with me, I'm present on LinkedIn, so feel free just to search for me there. You'll find me there and we can get in contact.
Awesome. Well, Matt, thank you for your time today. I really appreciate it. A masterclass here, I think, that any development person early in their careers would learn a ton from. So thanks for taking the time.
Paul, thank you. You have a good day.
Absolutely. And for everybody else, thanks for listening to another episode of Behind the Franchise. We'll see you on the next one. Bye.